Hello and welcome to Crux Investor. We caught up with Chris Reed, CEO of Neometals, earlier today, and some of his team joined him too. We talk about the lithium battery recycling project and also the vanadium recovery project. They put out some numbers recently which has helped us to build a picture of what the future looks like. We also talk about their AIM listing and green credentials in Europe. If you want our thoughts and opinions on the conversation, do go to cruxinvestor.com/club, where we also have detailed company reports and analysis. We've got commentaries from experts from around the world on a lot of companies and commodities, including the EV thematic. We've got training courses on there, and we do summaries of all the interviews that we do to save you some time, because we know you are busy. But most importantly of all, we've got a wonderful, thriving community of investors sharing their thoughts and ideas with each other in a nice, safe, friendly environment, free from all that judgment, trolling, and abuse you see elsewhere. There is a bit of a waiting list, but it's well worth the wait. But do go and join them and sign up at cruxinvestor.com/club. And we'd love your feedback too. So give us a like, leave your thoughts below. If you want to see precisely what we talk about today, do take a look in the description below. Gentlemen, how are we?
Very well, thank you, Matt. How are you?
Not too bad at all. Not too bad at all. I saw a few headlines. So I thought we'd better get in touch. Things look like they're starting to move. So I appreciate you coming on. We should probably do that, Chris. Let's do a 1-minute summary for people new to the story, because a few people getting on board the EV train, of which you belong to. So if you don't mind.
Yeah, sure. Neometals is an ASX-listed innovative project developer. So we've got 4 core projects. The common thread is what we believe to be unparalleled exposure to commodities that are most positively impacted by the EV and energy storage megatrend. So, we've got a lithium battery recycling project. We're building a demonstration plant in Germany as we speak. We've got a high-grade vanadium slag project up in Scandinavia, where we're looking to recover high-purity vanadium for battery use from the slags. And we've got a number of other residual sort of upstream mining assets in Australia.
Yeah, okay. Well, look, appreciate that. Thanks very much. I think this doesn't necessarily need to be a long one. I just wanted an update as to, where you're at on a couple of projects. Actually, I want to focus on the lithium and the vanadium, if you don't mind. But first of all, question. You and your old man have been selling shares. Why?
Well, we sold a parcel of shares very well. We did it in a special crossing to a leading Australian institution last Friday. I bought a new house and have to settle on it this week. And my father turned 75 in March, and he'd like to plan his retirement. So we made sure that we had all of our announcements out. We had significant interest from both domestic and foreign institutions for lines of stock, because, institutions want to, they like the story and they're looking to get in. We haven't raised money since 2013. We still remain collectively the largest shareholders in the company.
Okay. And you're listing on AIM. Do you think that was wise to be selling now? Or do you think it's going to affect your ability to kick off in the UK market?
Look, I wouldn't have thought so. We're doing a compliance listing on AIM, and certainly my wife raised the issue, having to sell the shares for the company that you love, founded, and have worked for the last 20 years for. If they go to $2, you're going to be upset with me. And I said, well, to be fair, we're all living in the house. You do work for the benefit of your family. So I've built a bridge and got over it. Okay.
Right. And do you think markets understood that?
Well, the stock went up and finished the day at the same price that, it started. So that, there was another special crossing by someone that we don't know who it was for about 1.7 million shares after market at the same price, 54.5. The price ended up at 57 yesterday, and it's down to 53 today. So, I think the markets go up, go down, but, I haven't had any negative feedback from any of our other institutional shareholders.
Okay. And what's the timing on the AIM listing?
So the AIM listing, I expect that it'll be after the guys in London have had a well-deserved summer break. So at this stage, I would be thinking it's an end of September, October proposition.
Okay. So not rushing into it. Well, let's talk about the projects that I wanted an update on. And if you don't mind, let's start with the lithium recycling project. Obviously, you've got the demo plant going on there. But so what's the latest from Primobius?
Yeah, so, we let out the operating and capital cost estimates to a class 4 level, so plus or minus 25%. So that's twice as accurate as the previous scoping study numbers that we put into the market. We've relocated the plant from the original study, which was in Kwinana, Western Australia, into Germany. In the intervening period, we've completed a year-long pilot plant, and that formed the basis for all the estimates. So the operating costs, we were very, very happy with how the operating costs. So despite those massive movements and also a change in the scope to include buildings and infrastructure, which previously would have been on site in Australia, the operating costs only moved by 4%. And so when you account for the certainty underpinning those numbers, you've gone from plus or minus 50 to plus or minus 25, and you've gone from it being based on laboratory scale to being based on an actual pilot. So we have a very, very high confidence in those numbers, and the capital costs naturally went up because we've relocated a larger scope. There's more equipment in there, and we've changed the construction site from Australia to Germany, and it's clearly an improvement in the quality.
Right, I get the cost going up because the scale of the plant has increased, but how? This is a new process for people to understand. For a lot of your shareholders who kind of maybe bought in a while ago, this was a mining company, you've migrated into, a project development company. So some of the terminology is changing, some of the processes are changing. So how do you start to get more certainty? Because plus or minus 25 it's getting close to, certainty, but how do you get to plus or minus 10? I mean, what's the process you're about to go through?
Oh, certainly for the battery recycling project, we're building a demonstration plant. So, that's a multi-million euro investment by both SMS Group and Neometals. We're constructing that at SMS's manufacturing headquarters at Hilkenbach in Germany. So that'll be commissioned this quarter, and the trials will be complete the following quarter. And so we will then come out with the level of accuracy, so a class 3, so you're getting down to the plus 10, 15%. And we envisage having those into the market in the December quarter of this year, and then looking to make an FID in the March quarter of 2022.
So you've gone from a class 4 to a class 3. Presumably there's a class 2 and a class 1. What do they look like?
Well, the class 2 is the equivalent of front-end engineering and design. So that's after you've made your engineering or your investment decision. And, you're actually going to, prepare the tender documents for class 1, which is the execution. Class 1 is your EPC or lump sum turnkey contract. So it's 5, 4, 3, 2, 1. And so in mining parlance, you would have scoping study, and that would be pretty much based on inferred resources. And then you would have a pre-feasibility study based on indicated and inferred, and you would have a bankable feasibility that would have reserves as opposed to resources. And then you would go into, or they call it a bankable feasibility or definitive feasibility in the mining industry. And then you go into the front-end engineering and design phase. We all go through at the same place. I think, the difference in this business is that we get access to graphite, lithium, nickel, and cobalt, which are 4 of the 6 most positively impacted metals, without having to develop a mine. So no carbon attached to that, all high purity because they're already in a battery. And we've just developed a process where we can extract those products out separately and reinsert them back into the battery supply chain.
Okay, so let's talk about the kind of Primobius relationship then. Again, it's going over a little bit of old ground for people who've been listening to your interviews, but again, for people new to it, so Primobius is a joint venture between yourselves and SMS, one of Germany's largest engineering groups. And you're in the kind of build phase, right? And you're optimizing. We get that. But at the end of this thing, once you start recovering these minerals, metals, you're going to have to sell them, right? So how does that process work? What are you putting in place now? What are the conversations that are happening now to ensure that you not only can produce these things, but they don't sit around? You're making money. Where's that bit come in?
Sure, I can defer you down to our GM of IR and commercial, Jeremy, who has his hands on the wheels with a couple of us. So, Jeremy, do you want to take over that question?
Yeah, sure. Look, in terms of that process, the demo facility, Matt, is sitting there for two reasons. One is to make sure that we can scale this up, and we tick that box. It's safe, it works to our satisfaction. But the other part's all commercial. So the feed to run our demonstration trial has all been donated from industry. We've got EV batteries from automotive. We've got stationary energy storage from Itoshu in Japan. And essentially we run 2 trials during the demo, and the output, so the materials that we extract, both the low value ones, which is your plastics, your steel casings, your aluminium and your copper foils, and the high purity chemicals out of the refinery, they've all got homes. They're all going to potential end users as part of an evaluation process towards offtake. So essentially, you're speaking to them now, you're allowing them to come and see the showcase demonstration, you're letting them touch and feel the products and to determine with their supply chain if they stack up to specification. Ultimately, come the end of the year, and certainly before that FID Chris mentioned March of next year, we have all those ducks in a row. So we have the feed lined up, and we have the off-takers, the people that are going to buy the chemicals and the plastics and everything else. And then we make an investment decision with T's crossed, I's dotted.
Okay, so give me an idea of the scale here. So on this, we're talking about lithium battery recycling here. So it's very topical at the moment, but you're here to make money. So what's the scale of the feed that's coming through? And what's the size of the market that you hope to supply into? Yeah.
So in terms of the studies, we've done the studies initially on 50 tonnes a day, and that's designed to accept the volume of production scrap out of a gigafactory, which is the normal standard sort of size. There's approximately 20 going into Europe at the moment, and they're in various stages of build. So the current market is about 75 to say 80,000 tonnes in Europe, but growing fantastically. And the incumbent installed capacity is about 35 to 40. So our plant, 50 tonnes a day, is the equivalent of 20,000 tonnes per annum. So if we put in 20,000 tonnes per annum of battery, of NMC, batteries from an electric vehicle or a stationary energy storage battery, we'll produce 10,000 tonnes of nickel sulfate. We've already beat the Chinese national spec, which is also the benchmark spec on the LME. We produce, this is if we've got an 811 sort of cathode, NMC 811 as the cathode going in, about 1,370 tonnes of cobalt sulfate, and lithium sulfate that we'll end up making into hydroxide, probably about 2,500 tonnes of lithium as hydroxide, preferably.
Right, which is great. So that's the kind of output. So you're starting to provide numbers into the market that we can start to value this company, or certainly as analysts, we can start to value this company, and maybe some sophisticated retail investors can too, which is great. Yep. But one of the other things we would look for, again, in mining parlance, you would say, right, we need what contracts they've got in place, because you kind of want certainty over this feed coming into you, right? What's the length of those? Absolutely. What's the scale of that, right?
So the whole strategy is about securing feed. So how do I attract feed? So from the very genesis of the current flow sheet, it was to develop the most environmentally sustainable flow sheet. So, one, as Jeremy said, safe, multiple safety systems and redundancies built in. And then we've got, obviously, because we're doing this to make a profit, high recoveries, high purities. And like I said, we've already passed the Chinese national spec for nickel and cobalt sulfates, which are about 80% of our revenue stream. And the emissions, we have no emissions into the atmosphere. We're not emitting anything into, water-wise. and our tailings product is an ammonium sulfate or a fertilizer. So that solves some of the legislative requirements for the cell makers and cathode makers in these new European battery regulations. But, the prime driver is the cost. And so we're confident we put in our costs at $1,560 a ton. If we're looking, if we're able to get, your cell phone batteries and stuff like that, there's about $11,000 of recoverable material in that. If you go down to NMC 811 with the minimum amount of cobalt in it, we recover about $5,600 per ton of feed, and it costs us $1,560. So, there's the tools in there to prepare, models, and it's very, very robust. And like I said before, the configuration is 20,000 ton. That meets the production scrap at steady state of a gigafactory. But the real game is to get the 90% that leave the cell manufacturer and end up in a car. And so whilst a lot of our competitors model in disposal fees, we don't have that in any of our modeling. Will we get paid for it when we start? Sure. But for us, it's about scaling up. And we're also studying a 200,000 ton plant, which is designed to take those 90% of batteries at the end of their useful life in 8 to 10 years, right? And so we will actually share the economics. So we will, having the lowest cost, the most environmentally friendly, and the lowest, amongst the lowest carbon footprint, certainly, well in excess of whatever's required. Existing pyromet recyclers take out, they've got half the carbon footprint of new material from minerals. We're looking to strip out more than 90% of the carbon. And that's important. So one, we can meet all of their legislative requirements, their aspirational goals to get down to zero carbon or as close to zero carbon as they can. And we'll make the most money based on the numbers that we can see, and we can share that with them. And so we want to enter into a symbiotic relationship with the car manufacturers to process the end of life. And hence why you get SMS. SMS are a 150-year-old German engineering company, one of the largest builders of metallurgical processing plants in Europe. And so they've got 14,500 employees in 95 sites around the world. They will build whatever the cell makers and the car makers need. And so, we're, to the extent that we get long-term supply contracts, we will make it very mutually rewarding to do business with us.
Okay, so I want to come back to the kind of the green thematic, because there's a real big move from funds and investors of all types globally. But just on the numbers that you're feeding in, and it's a question that's been sent in on multiple occasions. Is with the recovery process on these lithium batteries, because you've talked about high purity, high recovery, and therefore high margin. So you're saying that there's no kind of degradation of the inherent material that you're recovering. So there's going to be no discount applied by the market to the high purity materials that you're selling into the marketplace. There's no deleterious matter that you can't remove that needs to be removed elsewhere, and therefore adds cost to it.
That's exactly right. I mean, you're producing cathode spec sulfates.
So that's the certainty.
So you've dissolved them just like you've dissolved a mineral concentrate, except, we don't have anywhere near the impurities because they were battery grade when they went in. And so we're extracting them straight out at battery grade, and they've been, disassociated and recovered and regenerated. So absolutely not.
The only reason I ask, Chris, is because people listening in, they want to know that you've got certainty about the sale price, and then I guess with the contracts or long-term contracts for the feed, you've got certainty of the cost going in there as well. So
look, I think marketing risk minimal, right? Because you've got the Umicore and Glencore guys that are taking the batteries, putting them in a pyro process, incinerating parts of it, graphite, plastics, electrolyte, recovering mixed base metals in a dirty little button, crushing that up and putting it through a hydromet circuit at nowhere near the feed purities that we've got. And yet they go into the battery supply chain. So, we've got no reason to believe that we should expect a discount. And, it's fortunate us that, nickel sulfate trades at a premium to the LME nickel. Cobalt sulfate trades at a discount to LME nickel because predominantly it comes out of the DRC in a chemical form, like a mixed hydroxide product. So, we are, and look, even lithium, they've now got an LME lithium contract. So we're fortunate in that, our end products, nickel sulfate, cobalt sulfate, lithium hydroxide or carbonate, have LME prices that you can actually put in price protection. So you don't find a lot of new businesses in recycling where you have that level of certainty that you can enter into price protection with forwards or options or whatever.
Okay, so that's certainty around the process. Let's talk about certainty around competition, okay? Because you've got a hydrometallurgical process. You've referenced pyrometallurgy as part of the process. So there is competition out there. It comes down to a question of, what are the barriers for either new entrants or your ability to outcompete, outperform existing competition. So you've given us some clues in terms of the recovery process there, but I suspect it's going to come down to the green component, which I think, Jeremy's alluded to. Is that more and more important in these sorts of recycling projects in terms of your ability to sell, your ability to stand out?
I think, one of our unique selling propositions is, one, the flow sheet, and we have, IP associated with that. And it has a number of qualitative aspects that we've just talked about. And you've got a partner that can actually deliver plants of the highest quality that will work, right? And it's not the same as having startups that have been born out of government-funded research laboratories who need to scale up. And not only the scale up, the actual delivery risk and fabrication and experience in building plants and operating plants of this nature. And to be perfectly honest, it's come out of the base metal industry, solvent extraction that was invented at Mount Isa in Queensland, right? So we've taken an existing mining technology in a new field. The existing guys were using pyrometallurgy because we've been smelting base metal concentrates since the Roman times, right? At obviously different scale. And then you've had some others, to try to do an easy mixed hydroxide product, a la the HPEL plants, right? And we had a look at it. We thought, well, what do they actually need? They will need the manufacturing process for these cathodes. One, there's probably for NMC and high nickel NMCs, less cobalt. Lithium hydroxide is your preferred starting point. And the nickel and cobalt sulfate have come out just on solvent extraction alone, exceeding the Chinese national spec, right? Which would be 2/3 of the bloody demand in the global market. But we'll put ion exchange columns in the demo plant, and we'll aim to make, a Sumitomo or Norilsk spec product. Because we want to get the most for it.
Absolutely, yeah, absolutely, you do. But I'm trying to work out what the other players in the space need to do. So the OEMs or the gigafactories, which have these dud batteries or end of life batteries, selling to you, Chris. As long as they're getting the price they want, they could care less whether it goes to pyrometallurgical process or hydrometallurgical process. And again, likewise,
I think
the end user.
Yeah, I think the carbon footprint and the efficiency will trip them up once the battery alliance, the new European battery regulations come into effect. In fact, with another one of our projects, it'll actually, the Vanadium project that Darren runs, it'll have a negative carbon footprint, right? And it's most likely that we'll be able to attract a premium for that. And so I fully expect that they're just like, we have a look at the lithium market. There's industrial grade, technical grade, battery grade, 3 different prices. And for, the nickels, you have to report your carbon footprint. So once upon a time when we had internal combustion engines as the base load and the future forever, it was all driven by efficiency. We've got to use less fuel. right? We have to put stickers on the cars that show the fuel consumption. We'll judge how good the cars are going forward over a period of time by the declining amount of fuel that they use per kilometre. Now we're going to have to put in CO2 stickers. Your carbon footprint is, if you've got an electric car, it's twice the carbon footprint of an internal combustion engine. And that's because of the battery. So the only way you can pull that down is to take the carbon out of the battery chain. And the best way to do that's recycle. But look, even if you look at the volume, if we recycled every battery in Europe in 2030 that was available, it would still only provide 10% of what is required to stick in the front end of Europe's gigafactories. So it's not a panacea for this decade, but it's really a game for 2040 and 2050. We're just getting into it early and hard.
So, okay, but which is where I wanted to get to, because the decision-making process needs to be influenced by things like the Battery Alliance and so forth, and reducing CO2 emissions and carbon footprints is becoming a big part of the narrative. So have you just become a real thorn in the side for pyrometallurgical recycling companies? Are you going to be cannibalizing their current projects, their revenues? Is that what you're saying?
No, I think, they'll innovate, and the challenge is to scale. If you have a look at the impact of gigafactories on the existing raw materials production, we're going to have to, quadruple or quintuple production by 2030. The amount of gigafactories that they're producing, that they're building now, and the transition it's just happened. Right? It is happening. It's going to be fantastic demand pool. There's going to be increasing volumes of batteries. Prices will be up. There'll be plenty of room for everyone. I mean, okay, so you're sitting there. Are you going to bastardize Glencore and Umicore? Well, their capacities would be less than 10,000 tonnes in Europe. I mean, I think if you have a look at the biggest threat would be actually getting the mineral products in the front end, because even if you recycle, it only takes care of 10% of what you need. These guys would be scared. I mean, we saw I think one of the UK papers had an article that the UK should start stockpiling lithium, cobalt, and nickel now to protect the security of the UK car makers. Because you won't be able to make batteries unless you got access to the raw supplies. And the Chinese knew this more than 10 years ago, 15 years ago, and moved. And, okay,
that's
sort of where it's at.
It is where it's at. Thanks for the numbers that you've given us. But thanks. I just want to, again, just clarify precisely how you protect your position going forward. So well and good building this now, but if competition comes in and usurps you, that's problematic. Yep. But you seem to have got both ends of the story kind of bolted down. So that's really good news. We should talk about vanadium though as well. Okay, and then perhaps just in terms of the general green thematic, I think it'd be great to hear from Jeremy in terms of what's going on there, because it's the thematic that you latched onto early, and you're delivering on a number of your projects. So I think it's important to understand what else you're doing. So on the lithium recovery project, you talked about what's going on there. So can you give us an update there on the say the PFS numbers? I saw some new numbers come out earlier. Was it last week?
The vanadium, so the vanadium had the PFS numbers.
Yeah.
Yeah, Darren, do you want to run through your PFS numbers?
Yeah, sure. We put out the results about a week ago for the PFS. So really happy to get that major milestone behind us, and got a pretty good, solid set of numbers. Pretty well in line with the earlier work we'd completed on the project. So talking, we've confirmed lowest quartile operating cost of $4.25 a pound, which, it's very important when you're in the vanadium industry. You want to be lowest quartile OPEX. So really happy to confirm that number. CapEx was up just a little bit from the scoping study, but about $184 million US dollars. So very achievable. Pre-tax sort of NPV number about US $230 million and IRR of about 31%. So a good set of project numbers, and really happy with where that project's sitting. I mean, to be producing sort of zero carbon or negative carbon, high purity, vanadium inside the EU, and to be lowest quartile, pretty nice position to be in.
Again, so just gives the MPV 230 is a nice number. That's based on obviously what you know today, but what's the scale of the opportunity? We talked about scaling of the lithium battery projects. What's the potential here, just in terms of helping me with some of the numbers to kind of project forward?
Yeah, so the current supply agreement we've got with our partners, Critical Metals and SSAB, who are the suppliers of the slag, is for a 10-year operation and producing about 13.5 million pounds per annum of V2O5. So that's the current arrangements. We're also looking at other opportunities to look for scale and to look for other opportunities around the world to deploy this technology. And that's a work in progress.
Right. So PFS to what level? Again, people come on here and go, oh, we've done a PA to PFS level. We've done PFS to DFS level. What's the reality of this in terms of how quickly this thing moves forward, Darren?
Yeah, well, we're moving it forward very quickly, but robustly, and doing it properly. So the numbers at the moment are -20 plus 25% for PFS level. We've been working with Hatch on the study, so we've had a very good international engineering firm working with us on the project, and feel very comfortable. In fact, this easily is a PFS level study. In fact, beyond it, in my opinion. So we're feeling very comfortable with the numbers.
Okay.
In terms of moving forward, DFS by the end of June next year, so June 22.
Okay, so pretty rapid stuff. So, probably one for you, Chris, which is the number I mentioned there was 184 million
at the appropriate time. So yeah, look, we're earning into 50% in an incorporated joint venture. So we'll have a look at the funding solution for the incorporated joint venture. And so I think, how we've typically looked to projects like this, as Darren alluded to, you would be producing a critical battery material. So vanadium pentoxide, which is going into nickel vanadium manganese cathode batteries, lithium vanadium cathode batteries. It can go into vanadium redox flow batteries in the electrolyte solutions. So we're producing very, very high spec material, and it's cycle testing very well in the evaluations that are being undertaken at the moment with a cell maker. So we've got, in terms of confidence of selling it, it's like I said, marketing risk minimal, price risk we're expecting to get, and high purity vanadium producers get a couple of $1 a pound premium over the current prevailing market price, because 80% of the world's vanadium goes into steel. This is too good to put into steel. It'd be like putting Voss water on your flower bed. And so, we expect to be able to attract significant interest from green pools of capital, be they equity or debt. In fact, the Finnish sovereign has, indicated that they would like to put their shoulder to the wheel with respect to helping us get the carbon sequestration leg of the flow sheet financed. So I would, for life of mine offtakes, if you have a look at what we did to develop Mount Marion into the world's second largest hard rock source of lithium production, we had take-or-pay offtakes, you had build-own-operate agreements to take some of the financing load off, you had partial sell downs of equity. I think we've got a reasonably open book. I mean, the only difference between this project and the battery recycling is, for the battery recycling, you'll be absolute lowest cost nickel/cobalt producer. And the vanadium, you're absolutely in the lowest quartile costs. Not as easily to scale up, but that's not to say that we haven't got potential to increase the volumes. And as Darren said, look to deploy that into other locations in the world. Certainly Scandinavia doesn't have a mortgage on those types of byproducts that are being stockpiled.
Okay, but let me just a project developer though. Okay, you've got multiple projects. We're talking about 2 today. You've got another 2 sitting behind this. Following up. How do you protect your shareholders? How do you need to silo these projects? You get 180 plus raise requirement on this project. You're going to have to raise some money on the battery recycling project. So how do you protect your shareholders by siloing these projects, and how do they also at the same time benefit from the multitude of these projects which you've got going forward? Because if one falls over, it may affect the ability of another to perform.
Absolutely, and that's been part of our strategy, where they are all in independent special purpose vehicles. We've always developed our projects in that manner. We've in the last 5 or 6 years, we've taken a conscious strategy to de-risk a lot of the projects by bringing in very large partners to shoulder some of the operating and financial risks, and that's worked well. And you do prevent that domino effect that you just alluded to. But in terms of how we allocate capital, we're all limited by time on Earth, Matt, and history would go to show that we're trying to get the highest return in the shortest period of time, trying to get the highest PE, and therefore return on invested capital and payback time becomes some of the more salient metrics that we look at in terms of, and the ability to scale up or replicate, definitely. So they're all capable of being independently financed without dilution to the head company. And so it's really, how, in terms of the value, like I said, it's hard to go away from projects that are at the bottom end of the cost curve, assuming that, demo plant operates exactly the way that the pilot did, and that we end up with class 3 results like we did the class 4. On that basis, it should have priority. It's closest to cash flow and has the highest return on invested capital, right? Everything from that point out to the right, to the more upstream, more carbon intensive projects, then we're totally flexible. I mean, the shareholders ultimately own each of those projects. Now, we can have a look at doing demergers, where we can spin them out as separate vehicles, return shares back to shareholders, invite them to participate in new equity raises, and they can have the decision whether they want to keep that same level of exposure in the business and reinvest, or that they can take that opportunity and exit that business. So ultimately, we deem that they are worth taking from A to B. But once they go into the FID, certainly the capital requirements, the structure, the people become front of mind in our consideration about how they get brought into operation.
It's quite an interesting dynamic here, and it's interesting for people to try to understand. You've got a public company with some special purpose vehicles, which at some point will get into production. There'll be commercial entities in their own right, self-sustaining, etc. Is your reporting as a public company hampered by the fact that you've got a JV partner who may not necessarily want a lot of the information coming out of those companies? So how do you manage that?
Well, you manage that in the joint venture contract and your commercial agreements up front. Something that Jeremy raised today when him and I were having a discussion, the issue of control. Once you've signed the agreements, the controls that you agreed to are the controls that you've got. So the commercial team and the legal teams and the project sponsors, we do invest quite a lot of time. And, you see from when we sign that MOU with SMS to the duration of time to concluding a joint venture agreement, there are there's a number of protections in there. And one of the ones that's probably not that well noticed is that, if we're presented with an opportunity to deploy a lithium battery plant, and I quite haven't got my financing ducks lined up, and SMS want to proceed, I've got an 18-month option to buy back in on the same terms, right? So I get what you're saying in terms of releasing public data, but we're listed on a stock exchange. They appreciate and understand what our obligations are with respect of that. We each bring, we bought the flow sheet, the IP and the knowledge, and we're transferring it to them. They build the engineering, they bring the engineering skills and the ability to commercialize, to turn them into commercial reality. And in any good, long-term business, we have had a number of joint ventures where, despite what the equity percentages are, there has to be, absolute agreement. It has to be consensus on material matters, right? So you should be able to each state your case and come up with a happy medium,
Yeah, and the reason I ask, Chris, is because we've seen it certainly with royalty companies where they've got royalties on public companies and also private assets too, where the private entity isn't necessarily, doesn't have to report on numbers on the frequency that public companies do. So at some point, when these special purpose vehicles are either spun out, they may be listed, but they may remain private. The quality or quantity or amount of information that comes back through you as the public company, may be restricted in some way. And does that affect your decision making as to the best way to deal with that special purpose vehicle or joint venture?
Yeah, look, I think to the extent that a lot of ours are genuinely 50-50, then you don't consolidate the cash flows, but you will report the equity share as a note in your financial statement. So despite us at Mount Marion not bringing in, not consolidating, we did state the SPV's actual financial performance, statement of financial performance and statement of financial position, so that people can draw an analogy on, or, they need the information. Yeah.
Okay. Well, long way off, lots of decisions to be made between now and then. Can I just, Jeremy, I just want to talk to you. You kind of managing this sort of AIM process. I'm intrigued by the narrative out there, okay? Because there's a lot of chat around ESG, green initiatives, green investing, all of that. I want to know how much of it is chatter, just we've got a tick box exercise, and how much is reality in terms of when you were talking to, I guess, lots of funds, institutions in London, what were they saying to you? Because they must be viewing you as a kind of green initiative at the very least. What were the conversations? What were the demands?
Yeah, look, I think some of those discussions, all those institutions and funds and brokers that we speak to are pretty well aware of greenwashing and chatter and slick, marketing lexicons versus, what's the real deal. So, the fact that we've got a sponsoring broker that's supporting us into an AIM listing suggests that they probably think this is the real deal as well. But, you could have an exploration company with an aspiration to make unobtainium, and it's going to go into this U-Butte green application. And we too have the same aspirations for lithium and nickel and cobalt, etc. But there's another string to the bow in that, that's one aspect. The second aspect is that, the real side of the sustainability, the core business that we have is sequestering carbon and recycling finite materials and stopping hazardous stuff going into landfill. So it's another rung of an aspiration just to make an old mineral, which I can now call a green mineral. So, in essence, we're complementing mining with those two projects in Europe. And that's a good thing because mining's not going to disappear anytime soon if we want the volumes of materials that we need for these vehicles. But it is a different take on mining because we're not digging the traditional hole, and that's pretty topical at the moment. There's quite a few people questioning how green our extraction processes are, and I say our, I don't mean Neometals, I mean collectively how we get this stuff to make the vehicles. So to answer your question, I think it's been supportive, and that people recognise that we have gone a rung above an aspiration. It's sort of the real deal. That's my takeaway.
But are these brokers? I know I think you're using Senkos in London. Are they more likely to push your product, because that's what it is to them, than the next guys because of the green component, or is it just a case of where they can make a quick buck? I mean, what is the mood? What is the narrative genuinely there?
I don't think there's a single money manager who is interested in ESG of itself. I think they're all interested in a return on investment for their investors and related parties. But if you can add another trick to your story in terms of the sustainability, they're genuinely very interested. We've chosen Senkos for the fact that they're very well versed in the subject matter. When we list, as soon as we've got first revenues from green sources, we're looking to secure the green economy mark. So it's real, but the dizzy heights of ESG euphoria, I think, are dissipating a bit. I mean, there has to be an element of reality to all of this, and it just so happens that is what we're doing, irrespective of what it sounds like in a narrative. But certainly, it's being embraced. That's fascinating to me. Are you saying it's dissipating because it was a fad, or it's dissipating because it's a matter of course? Of course, it should be in there, or it's a point of differentiation if there's not much between you. Because I get the bottom line is you still need to make money. You still need to be a growth story. You still need to deliver on the fundamentals of running a business, project developer or otherwise. But is there a wariness to the ESG component? Well, look, not that I've seen. I don't. When I say dissipate, I think it's only dissipating because people, fund managers and brokers, are trying to sift through reality, so sort the wheat from the chaff, so to speak. So, I think there's still a massive appetite for what's real and translates into returns, because ultimately that's never going to disappear. There's ESG funds, and then there's funds who care about ESG, and you might find their filters are identical. Some people would argue that all funds nowadays have to be ESG funds. They just might not put it in their title.
Right. Okay. I tell you the interesting narrative, again, speaking to brokers, analysts and fund managers that we've heard, certainly coming out of London and North America, is that they are cognizant of the momentum stories of last year, the promote stories of last year, and they are looking for companies with solid fundamentals, because at some point the promote component will fall over because the fundamentals aren't there, and are recommending that people switch out of their promote story, at least start taking money off the table on those and put them into more fundamental stories. I guess a bit more like yours, where there's some substance to it. It's interesting what's going on in the marketplace.
They should pin their ears back and have a look at Neometals.
There you go. Guys, I appreciate your time today. Great update. Nice to see things moving along. So again, Chris, leave us with those timings on, well, certainly when these two projects are going to be, FID again.
Yeah, so FID, battery recycling, March quarter 2022. Vanadium recovery project, December quarter 2022.
Beautiful. Guys, appreciate your time today. Stay in touch. Let us know how you get on, okay?
Cheers,
Thanks
Matt.
a lot. Keep safe.
Cheers, Matt.